Hello and welcome to Bazaar Morning Call, coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Lata Venkatesh and with me, my colleague Rima Tendulkar. Again, women power. All the boys have gone on holidays, but we are there to take you through the last 2 days of the trading year. It doesn't look like it's a day without cues. In spite of it being the last 2 days, you've got a decent amount of things to move the market if it wants to be moved over the weekend.
Indeed, the last 2 days of 2024, and what a good year it's been, and it also marks the beginning of the new calendar year. And as you said, right, there's lots to talk about, lots of headlines, whether it's on, H-1B visas or the kind of flows, the IPO action. There's so much that we have for you on our show today.
Absolutely. So let me start. My first set of cues are not very much in favor of the bulls. Of course, we put behind a day and a week, that's both Friday and the week that was, the week that ended on December 27th, were days when we did see a gain. Friday gain of 0.25% and a full week gain of about 1%. But the FPI selling has continued. It's about 1,300 crore. I'll come to it in a bit. Let me just finish the Wall Street action. That looks, a bit downbeat for us. The handover queues over the weekend are all negative, as you can see, between 0.75 and 1.5% have been the falls, and particularly on the Nasdaq, the fall 1.5% brought down by two of its stalwarts, Tesla and Nvidia, don't bode too well in terms of positive bullish sentiment. The 10-year yield, which is something which we should always worry about, has actually gone up by about 3 or 4 basis points, now at 4.62. And we must understand this. When you can get 4.62% in a risk-free return in a currency that is not depreciating, the attraction away from EMs is likely to continue, which ties in with the first thing I said, that the selling continues, 1,300 crores. And the dollar index has been a little weak compared to what we saw through the week. 108.1617 was the better part of the average for the week. It has now come down to exactly 108. We could be a little happy about it, and we saw the rupee also rebound after a huge loss. Went to 85.90 in one fell swoop, and then the Reserve Bank appears, and we gain back about half of what we have lost. But tensions remain actually for EM currencies. There's very little reason to buy. The only thing that might save us is that a lot of people are on holiday. Even this 1,300 crores has come from a gross buy and sell of about 10,000 crore. Yeah. On a normal day through the year, it's about 64,000, the buy and sell together. It's clearly thin, but it is still thinly negative.
Indeed. So now the question really is that we saw a rebound last week, right? So the Santa Claus rally finally arrived, because the week prior to that, the benchmark indices had lost 5%. So after that kind of a drubbing, last week at least, the benchmark indices were up close to about 1%, at least on the headline, front. But the problem is that the Nifty's been struggling below the 200-day moving average. Take a look at Friday's action. So on Friday, the Nifty went up to hit a high of 23,938, but it ultimately closed closer to 23,800 and below the 200-day moving average. So at higher levels, there is some supply which is creeping in, there is selling which is coming in, and we're losing momentum. So the 200-day moving average, which is a level of 23,860, is going to be a crucial resistance for us to conquer on the way up. We're not too far away, just 50 points away from that level, but that's marker number 1. And after that, the markets will watch whether we can conquer Friday's intraday high, 23,938. And a lot of technical analysts we spoke to said that, at least on the immediate terms, the support on the way down is 23,500. Once again, putting on board the supply, in terms of what we had in cash markets. As Lata said, the FII outflows were 1,300 crore rupees. But again, matched, in fact, a lot more than that. The DIIs bought double of that, 2,500 crore in terms of the cash market purchases. And month to date, the FII selling now stands at close to about 10,000 crore rupees. So in terms of the cues for the week, again, it's thin in terms of the economic data. You've got the PMI data coming out, the jobless claims data. But the big one for India will be the auto sales numbers, which will be out on the 1st and 2nd of this month. At that said, the IPO action continues to remain hot because we've got 3 new listings today. And the one to watch will be Cenoris Pharmaceutical, which saw a bumper listing of about 94 times. Carraro and Ventive Hospitality, which is Blackstone owned, will also be tracked.
Fair point. I just want to add one more point that's come, just a few hours before we start trading. The statement from Donald Trump that he is going to back H-1B visas. I mean, it's a long and arduous and bitter argument within the Republicans itself, with the conservative Republicans blaming the H-1B visa and Indians in particular for taking away American jobs. And there is, of course, Elon Musk, who's been supporting the H-1B visa. And a tweet from Vivek Ramaswamy kind of seems to have unleashed a bit of a backlash. But Trump comes in and supports it. And look at his actual statement, which will come up for you. The statement itself is that I have many H-1B visas on my properties. I have been a believer in H-1B visa and I have used it many times. It's a great program. Now, this could be a big positive, at least sentimentally.
Yes.
Whether they will actually change the rules, I don't know. But Rima, 70% of H-1B visas come to India. So should we take it as positive?
Yes, because considering that he was a critique of it under his first term and he made life difficult.
Yes.
So in that context, the fact that his stance has changed is a positive on the sidelines. But Trump being Trump, you would still wait for the final guidelines. And two, it's important to note that the Indian IT companies have reduced their dependence on H-1B visas after what they went through between 2016 to 2020. But we'll discuss this with our experts, on the show. But IT stocks definitely on the watch list. But let's get to the equity calls of the day. Chris Wood of Jefferies says an investment in HDFC Bank will be reintroduced in the Asia ex-Japan long-only portfolio with a 4% weighting. He says this will be paid for by reducing the investments in macro-tech developers, L&T, ICICI Bank, Axis Bank by 1 percentage point each. He adds an investment in Siemens will also be introduced with a 4% weighting. As for India long-only portfolio, Chris says an investment in Siemens will be introduced with a 4% weightage by removing the investment in AU Small Finance Bank. The investment in HDFC Bank will be increased by 1 percentage point by shaving the investment in Axis Bank.
Okay, now that looks like a shot in the arm for HDFC Bank.